there, this is James and you're watching Tixee Live. Good afternoon, by the way, to everybody. Now, in today's program, I want to discuss a nightmare that a certain currency is going through currently and is continuing. As well as that, I want to talk about another currency which is also facing a lot of uncertainty, some a little bit politically driven. And of course, then I want to talk about the main event, which is happening tonight. But before I get into that, don't forget these little episodes or these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get to it. So, as you saw with the thumbnail, I want to start off talking about the euro, because the euro's nightmare is continuing. We did have a bit of economic data come out in reference to the eurozone as well, which this is not the drive behind euro's nightmare though, but still it's not positive data. And that was that EU retail sales year on year was announced at 0.2% versus 5.4% expected. That is a lot lower than anticipation. The expectation and 0.2 versus 5.4. But this is not helping. This data did not help, but is not the cause for the euro's struggle at the moment as it continues to crash. And in fact, it's actually dropped below 1.0200 for the first time since December 2002. And I'm bringing it up on my chart at the moment because it's currently trading at 1.0193. Again, like I said yesterday, since I've been in this industry, I've never seen it at these levels. So this is pretty unprecedented, which then obviously, there's other questions being asked. What is the driving factor behind this? There's several. Of course, obviously, we have recession fears like we discussed yesterday. We have a strong US dollar, which is acting as the safe haven of choice, which is pushing the euro down. As well as that, obviously, we have a lack of direction or action so far by the ECB, which is putting pressure on the single currency, poor economic data, and this ever-growing gas crisis, which I keep talking about. Wasn't a big story a couple of weeks ago, but when I started talking about it, it started becoming a big story. And just so you know, German Bundesbank estimated that the German economy could take a hit of 5% off its GDP because of the gas situation. And don't forget, Germany is the powerhouse of the EU. It's the #1 economy. So there's concerns with that. So this is really, and then bringing me to ask the question, which many analysts are asking, can the euro dollar go to parity 1-on-1? And a couple of big investment banks actually think it can. For example, ING, they believe, I think this is maybe a little bit dramatic, but they believe it could go to parity by the end of this month. TDS, they're a little bit more optimistic. They think the euro will trade between the levels this month between 103 to 107. Credit Suisse thinks in the near term 1.0340, but parity by Q4. Deutsche Bank, parity by Q4. Parity within the next 2 months. So that's the general consensus by a number of banks who are extremely bearish on the single currency. But let's have a quick look and see where it is at the moment. Like I said, it's currently trading at 1.01979. I've never seen this level before since I've been in this industry. There is an awful lot of pressure on it. And like I say, that is the question on everybody's mind. We have got Lagarde speaking this week. I don't think she might be able to give it any bit of a boost, to be honest, because I always think she's quite dovish. If we look at Euro Swiss as well, currently trading 0.989. 967. That's the lowest level in 7 years. Not been trading this level since the S&B actually intervened back in January 2015 and removed the euro Swiss franc. So the lowest level in 7 years. If we have a look at maybe the euro sterling as well, because sterling, and we'll be moving on to that in a minute, the euro sterling's in a bad way. This is on a 4-hour chart. Okay, it's holding its own slightly against the sterling because, like I say, the sterling is facing an awful lot of issues as well. Currently trading at 0.85591. So yeah, I see a key level, to be honest, on this pair around 0.85146. But like I say, yeah, the euro dollar not, or the euro in general, not having a nice time at all. But like I just said, it's not the only currency currently having a very bad time of it. The other currency I want to briefly talk about, and that is obviously the sterling. Okay. Now, I did mention this morning that there was going to be a member of the MPC or member of the Bank of England doing a little bit of a speech today, and it was in fact it was Bank of England's chief economist Hugh Pill, and he says we're not, again, very negative news. We're not expecting really to see any growth, and this is in the UK economy, over the next year or so. So no growth in the UK economy over the next year or so. Okay. He also then went on to say, so we've got no growth for the next year or so. And then he then went on to say he's open to voting for a larger move in interest rates than the 25 basic points favoured so far by the Bank of England. Since December, the Bank of England has been raising interest rates, but they've only been raising it by 0.25 basic points. But now he's saying, and don't forget, there was 3 members in the last MPC vote who voted for 50. Now wasn't one of them. He wasn't one of them, but he says he's now open to that. To anything to tackle the 9.1 inflation the UK has at the moment. If the Bank of England was to do that, that would be the first time the Bank of England has raised rates by 50 basis points since 1997. Honestly, we have history in many ways being made at the moment. I'm not saying they're going to do it by 50, but like I say, I'm quoting back all these different dates and things like this. And of course, also weighing down on the sterling, and we're going to have a look at it at the moment, it's this complete political uncertainty again, which is heavy on the sterling. We've actually had more junior ministers resign today. Bojo or Boris Johnson, I watched the parliamentary prime minister's question time, absolute farce, honestly, and clearly he's under pressure. There's even talk now of the 1922 committee changing the rules of a no vote of confidence. The rules usually state that if you've had a vote of no confidence, you cannot have a no vote again for a year. But because of everything going on, they're looking to try and change these rules. So, yeah, so an awful lot of uncertainty for the sterling as well. And in fact, it's trading at 1.18 at the moment. No, it's just back up to 1.19, and we'll bring it up in a minute. And many analysts are now saying, with all this uncertainty, could we see 1.16 for the sterling US dollar? And it hasn't traded at that level. Again, I'm quoting, this is like a history lesson. Hasn't traded at that level since March 2020. So yeah, let's bring up the sterling and have a look at the sterling where we are with it at the moment. I mean, it did touch the lows of 1.18, but it's currently managed to retrace a little bit back. Not surprised with all the selling pressure. It's trading currently at 1.1911 though. And it did, like I say, briefly went under that and traded around the 1.1893 level. Excuse me. So an awful lot of pressure on the sterling as well. So yeah, let's see what happens with this Bojo situation, and more chit chat about obviously maybe a 50 basic point rate hike. So yeah, that's what we have. So they're not doing as well either. Good old sterling. Okay, what else? Oh, yes, there was an interesting piece on oil I read today as well. One analyst, he's actually saying by the end of August, in his opinion, because of all these recession fears, aggressive rate hikes by banks and things like this, oil could go to $85 per barrel by the end of August. By the end of August, it's currently trading. Okay, yes, obviously we've dipped under $100 a barrel. I mean, it's currently trading around $98 a barrel. So that's maybe not quite unforeseeable. Maybe that prediction is not completely off the cards, because I said we are currently trading at now under $98, currently trading it now at $97.92. So it'll be interesting to see if this momentum can actually continue, because like I say, we are got these recession concerns. We are seeing a lot of dollar strength across the board because of it, and there is demand waning. Our fears of demand waning. So yeah, maybe potentially the $85 by August is not completely unreasonable. So yeah, oil under a lot of pressure as well. Something else as well, I want to talk about good old gold, my favorite. Everybody knows me. I know I love gold. Currently hovering around the lows of December 2021. So over, lower than a 7-month low now. Currently trading at $1,764.60. So yes, indeed, it is under pressure for a lot of dollar strength. Okay, let's move on to the other event, which is happening today. Let's have a conversation about that. Sorry, another swig of water. Sorry, got a bit of acid today. So I've been drinking lots of water trying to get rid of it. So yeah, as we all know, the next big event is, of course, the FOMC minutes, which is happening tonight. And it's going to be interesting to see. We're going to have, obviously last time, Powell, the inflation terminator, which I call him, he said he was their aim is unconditional to get inflation down. Unconditional. So are we going to expect similar talks in these minutes? Then obviously in the last press conference he said 2% target, 2% target, 2% target. So how much are these minutes going to be keep talking about getting down the inflation target down to 2%? And then really what the market is going to be asking is, are these minutes going to be giving away if it's going to be a 50 basic point rate hike next, a 75 basic point, acid, sorry, painful all day, 75 basic point next, or even 100 basic point? Will these minutes give anything away? And this is, again, another history lesson. Just, to go along suit with this, more major central banks have raised rates in June than any other month for the last 2 decades. So yeah, like I said, we're clearly in the history of the making. So really the question is what these FOMC minutes going to give to us, and how will the market react? Is it going to give us further panic, or is it priced in? Is it already priced in and the market's already accepted that we're bordering on potential recession and that we are going to continue with this direction? Is it priced in already? Or are we going to get more information out of these minutes to maybe scare the market even more? Or are there going to be hints that some members of the Fed are getting cold feet on raising interest rates too aggressively because they're getting nervous about the market? Are they getting nervous about them not in the market, but about the economy handling it? So this is all what these minutes are going to do. So if we do get a little bit of a hint that there's some members getting a bit nervous about obviously economic slowdown, then you could see actually a boost of confidence in the market. If we get 75, 100 or 50, I think the markets are priced it anyway, so I don't think it would really potentially change the direction of what's happening at the moment. Maybe if 50, maybe we get a slight boost, but I don't think it would be enough to change the overall sentiment unless we get hints in the minutes that there's a couple of members are getting cold feet about being too aggressive. So that would be interesting to see. So that's happening tonight, round about 6 p.m. UTC, and I will certainly be watching it. So yeah, another exciting day. A lot of doom and gloom for a number of the major currencies, the euro, the sterling. Be interesting to see at the same time what does come out of the 1922 committee in the UK, and they can chat and they do decide to change the rules of the vote of no confidence, because then we really are going to look at uncertainty for political uncertainty in the UK, as then even fears of a snap general election. So yeah, there's that. That's going to be an ongoing story, holding or helping to weigh down the sterling. But anyway, let's see how that develops tonight. Let's see the FOMC minutes, and obviously we will talk about the reaction tomorrow morning. Other key events to come. We have US ISM manufacturing happening in about 40 minutes time. That would be worth looking on. FOMC minutes, like I said, SU ADP employment change tomorrow, US initial claims, ECB laggards to speak. Wonder what she can do for the euro, US average earnings and US unemployment and US NFP, which I will be doing a live watch along of those events on Friday. So please come along and join me for that. How's the market doing? Well, FTSE is currently trading slightly higher, 0.80%. DAX is currently trading 1.46% higher. Eurostock 50 currently trading 0.28% higher. So they're having a slightly better day than the euro and the sterling. Don't forget, you can ask me questions anytime you wish. If there's any questions, or if you simply just want to say hello, please feel free to do so. This is what I'm here for. This is a live broadcast, so it is here to talk on, take on your questions, or have a chat, or have an open conversation about things. If you want to have an open conversation about it, whatever you like, it's what we're here for, or what I'm here for. This is the whole point of tixee Live. Sorry, I got really bad. I don't know what it is. I think I had a Coca-Cola at lunch. I think that's not agreeing with me. Okay. Well, if there is no questions, don't forget, I'm back on tomorrow at 8 a.m. UTC, and we'll talk about the impact of the FOMC and any more developments from the 1922 committee. And at the same time, I'll be back on again tomorrow afternoon at 1 p.m. UTC, and we'll talk about some key events which are happening tomorrow, like the ADP employment change. We'll talk a little bit about that. And like I always say, if you're watching me on Facebook and you quite like this episode, you found it useful, by all means, give us a follow. If you're watching me, if you're watching me on YouTube and you like it, by all means, subscribe if you like. Hit the notification button next time you know I'm going live. If you've enjoyed this episode and you found it insightful, interesting, and you put up with me being incredibly enthusiastic, give me one of those. It's nice to know that people are liking what I do. But anyway, till then, remember, these little episodes are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.